this whole mindset of inflation is really setting in and sinking in. And frankly, what that does is that it feeds on itself, and it actually can accelerate the inflation because you're pulling forward even more purchases. Silver was actually the first international currency. It's a store of value, and it's recognized worldwide, and that's why people will go back to it, in times of chaos and in times of inflation. There are multiple ratios and comparisons to other assets that ultimately, for me at least, predict a $300 silver target.
Here at Liberty in Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is a returning guest, Peter Krauth. He is the editor of silverstockinvestor.com and goldresourceinvestor.com, and the author of the new book coming out in May, The Great Silver Bull. Peter, thank you so much for joining us today.
Hi, Elijah. It's a pleasure to be here once again.
The first topic I wanted to touch on is inflation, because we are seeing inflation continue to rise. And you've said that really it is the single most important aspect when discussing the investment landscape.
Yeah, I mean, I think that I don't think too many people would disagree with me on that right now. If there's one thing that I think investors and just people who, are not necessarily investors, but just go through their daily lives and what their experiences are lately, I don't think you can deny that inflation is probably the single most or one of the absolutely most discussed topics, period, whether it's regarding economics, finance, or just day-to-day life. And that's why I think that it's really going to be such an important factor as we go forward. And certainly for investors, that's an absolutely, sort of unavoidable aspect of what our landscape will look like over the next several years.
And what are some of the key investments that you're looking at to combat inflation at the moment?
Hard assets are, to me, certainly the way to hedge against that. For me, certainly silver and gold are top of my list. You'd have other commodities. Certainly you have base metals, things like uranium, agriculture, real estate, especially income-producing real estate. You can go into all sorts of other things. You can have things like diamonds, fine art. But, some of the easiest things for everyone to invest in would certainly be precious metals. There's a fair bit they're accessible, they're liquid, and they've proven themselves over not just centuries, but even millennia.
And you've mentioned how silver really outperforms in times of inflation. So it doesn't just make up for the money that you would have lost if you held cash, but it actually outperforms the inflation rate. So why do you think silver does this?
Well, there are a few reasons. One is, silver has proven itself as a chaos hedge, an inflation hedge for, as I say, millennia. It was the very first. Actually, you mentioned my book earlier, and that's one of the things I talk about in the book is how silver was actually the first international currency, and that goes back a couple thousand years, I believe. And it's a store of value, and it's recognized worldwide, and that's why people will go back to it, in times of chaos and in times of inflation. And it's simply money and recognized money. And so you mentioned earlier about how silver crushes inflation, and we have proof of that. The best analog, I guess, is the 1970s, where the Dow and the S&P were completely flat. And that's before, or I shouldn't say completely, say they were up about 20%, but that's over 10 years. So say 2% a year. Certainly not what you'd expect from stocks or hope for from stocks. Gold was up, I believe it was 14 times. Silver was up 37 times. So that's why I still say silver absolutely crushes inflation and crushes stocks even during times of inflation.
Can you give us kind of a forecast of where you see inflation heading from here? Because you have mentioned, and if you just look at the numbers, the money supply has really increased significantly, really since the 2008 crisis and since COVID. So just you've mentioned that 25% of the US dollars were created within 1.5 years after the COVID pandemic. So that's just startling. And it seems like if inflation is based fundamentally on the size of the money supply and how that increases, we should be seeing continued inflation and even more dramatic inflation in the years ahead.
Well, Elijah, you hit the point right on the head, and that's exactly why I say it's going to be a defining factor of our investment landscape for years to come. I think we're seeing the beginning of it only. In fact, to have the global money supply up 5 times in 20 years, to have 25% of all U.S. dollars created in about a year and a half after the pandemic started. I mean, these are just startling numbers. I remember when the pandemic had hit, and let's say within a few months into it, people who are not even, finance buffs or economists or anything like that, just people who don't even necessarily run their own businesses, but have, kind of a feel for what's happening. And sometimes they couldn't even put their finger on it, but they would say, all of this stimulus that we're getting, we're all going to pay for this. And I agreed with them, and it didn't take long. It took about a year and a half. It was the start of 2021 where we started to see inflation creep up 4%, 5%. Now we're at 8% or just below 8%. And as you say, those are just official numbers. And those numbers took into account the month of February. And then in the last week of February was when we had the invasion of Ukraine start. And all sorts of things spiked from there. We had fertilizer prices spike. We had food. We had all sorts of base metals, things like nickel, iron, copper, zinc, and gold hit an all-time intraday record. Silver ran up as well. And so none of these things are even taken into account yet when we look at, say, the coming numbers for March. So I'm really expecting that when we reach, early to mid-April and the March numbers come out, I certainly expect an increase. I even think we may be quite close to a double-digit increase, somewhere perhaps in the order of 9 to 9.5%. It would not surprise me if we were already at 8 and we get a spike, the effect of a spike that we've seen since over the past, say, 3-4 weeks. And even if inflation sort of runs up and then starts to trail off a bit, there are a couple of things to keep in mind. One is that I expect certainly they'll stay at elevated levels, so high single digits, easily for this year and perhaps for several years. And another thing to kind of keep in mind, the central planners are going to tell us, well, if we see, say, inflation pull back a bit, let's say, from somewhere around 7 or 8% to down to 5 or 6%, and they'll say, oh, well, look, inflation is cooling. But that's misleading because, one, it's still relatively high. It's triple what the Fed's target is. So the Fed target's Fed being 2, 6 would be triple that level. And high inflation or elevated inflation is simply an ongoing increase on already high prices. So all of these prices have moved up. And even if inflation were to pull back somewhat, you're still talking about increases on these already higher prices. So this thing just sort of feeds on itself. It's like an accelerating acceleration. And it's all kind of sad, actually, if you think. I mean, I like to look at this in the sense that we've all heard of something called delayed gratification, where people would sort of put off purchases for another time in the future when they've saved money, when they can more easily afford something. But it feels like what we've done is, by printing all this money and trying to stimulate to, avoid a temporary downturn, is that we've accelerated gratification. We've pulled forward, years or decades of future consumption. And I just don't see how we can't pay for this. It's there's going to be a reckoning, basically, is how I see it.
And how is the average American going to be paying for this pulling forward of wealth, from the future? You've mentioned how the Fed is really in a dilemma right now. They can't really solve the problem. So how is the Fed, do you think the Fed is going to respond to this? And how is the average American going to be impacted by this?
Well, so I think the Fed's going to keep talking a tough talk. Maybe we'll get more than a quarter basis point increase at a time. But think about it, Elijah, we're at 0.5% roughly in terms of the Fed rate, and inflation is officially at 7.9%. So that's a huge gap. They're nowhere close to raising rates enough to try and cool inflation, and they're not able to. As I say, all they can really do is a lot of job owning. They can do plenty of talking to try and sound tough, but I just don't see how they can actually raise rates enough to make a dent in inflation. And let's say they did, well, the implications are huge. The implications are much higher rates, which would impact mortgages. Higher mortgages would hurt housing. A weaker housing would hurt construction jobs. That would hurt all sorts of materials, things like renovation, furniture, paint. The list, there's just sort of this ongoing list of unintended consequences that there's a domino effect, really, where, trying to actually make a difference realistically, which in a sense should be done, but can't be done, would just have sort of too many other detrimental effects. And so really, as I say, their only real weapon is to try and talk tough. If they did raise rates too much too soon, I think that the market would have a fit. Stocks would pull back significantly. We're very likely headed towards a recession one way or another anyways. And so if they do raise rates too quickly, it's going to probably worsen a likely recession. And then they'll have to back off quickly. And if they back off, they'll back off from where? 2%, maybe? I mean, they should be closer to 3 or 4% before backing off and trying to, lower rates to stimulate. So, I mean, it's a terrible dilemma. I certainly wouldn't want the job. But I really think there's practically nothing they can do except raise rates relatively slowly and trying to keep talking tough.
Now, turning our focus back to precious metals, a lot of people have mentioned that gold and silver actually anticipate inflation rather than responding directly to it itself in lockstep. So how do you see gold and silver anticipating inflation? We've seen quite a rise in the last month or so, a bit of a pullback here now, but are gold and silver anticipating inflation once again like they did during the COVID-19 pandemic? They rose quite a bit and then moved sideways while we were starting to see quite a bit of inflation. So they anticipated the inflation and then the numbers came out. Are we seeing the same thing right now?
I think so. I mean, gold had a little bit of a spike last November, pulled back. As much as people kind of maybe get bored, they see a move, they get excited, and after that they kind of get bored. But above 1900 is really a solid number, a solid place for gold to be. That's tremendous in terms of gold miners who are just sort of spewing out cash like crazy. Their costs are probably closer to maybe 1,100 kind of on average. And so, yeah, absolutely. I think that the metals discount inflation. The move that we saw recently, although there's been a small pullback, as you say, gold is staying well above 1900. And absolutely, that's what they do. They did that in early 2020. They're doing that again. And I think, when we talk about inflation, I think what's happening is that this whole sort of mindset of inflation is really setting in and sinking in. And there's this whole thing called inflationary psychology. And what happens is, if you look at the US, you look at Canada, about 2/3 of the population is under 50. So these are people who have not lived with inflation, realistically don't really have a feel for what it's like, that it can stay around, that it can hang around for years and decades. And so with so few people really kind of grasping it, it takes a while for it to be around. And once it has been around long enough and it sets in and people start to say, oh, well, you know what? This is not going anywhere. It's going to stay like this for an extended period. What do I do? And so they try to get ahead of inflation. They look for different ways that they can, maybe compensate for it. If that means going to the grocery store and buying things that are not perishable and stocking up on them, if it means, larger purchases, trying to pull forward larger purchases, trying to anticipate and avoid having to pay for a more large or expensive things later on at a much higher price. I think that's kind of, in some ways, at least partly what we've seen happen with real estate. It's partly what we've seen happen with things like vehicles. And so that's kind of what happens. I think people accept that it's here to stay for an extended period, and they start to act accordingly to try to get ahead of it. And frankly, what that does is it feeds on itself, and it actually can accelerate the inflation because you're pulling forward even more purchases, and you're actually bumping up into larger purchases. And so, you have this whole thing where you're speeding up actually transactions, the number of transactions, the size of transactions. And again, that just becomes a bit of a self-fulfilling prophecy, and you can just make inflation that much worse. It just becomes a kind of a vicious circle.
And we touched on this last time, but if you could share with our viewers the price predictions you have for both gold and silver, because it's pretty staggering. The prices you see for gold and silver are a lot higher than what we have today, multiples.
It's interesting. Thanks for bringing that up, and I think that's important. But what I find interesting is that in the last sort of few months since we spoke, I'm starting to see more and more targets by analysts or mining companies, managers, et cetera, that are gradually creeping up closer to those kinds of targets. So in any case, my target for gold is at least 5,000, perhaps easily up to 10,000. My target for silver is 300. I'm pretty much fixed on that. And in fact, in the book, I think I give about 5 or 6 different reasons, or not just reasons, but justifications, where I've analyzed and I explain how I get to that number. And it's interesting how, in multiple ways, that, for me at least, has been the anchor, the $300 level, where there are multiple ratios and comparisons to other assets that ultimately, for me at least, predict a $300 silver target.
And I think it's also key to understand when we do get to those amounts, what is your exit strategy? Because at that point, it might not be a good idea just to cash out into dollars, because those dollars are going to still be being devalued. So your perspective on what next asset class people should keep an eye out for to transition into.
That's a great point. I mean, that's true. And that's something I've certainly spent a lot of time thinking about, because you're right. I mean, $300 silver or, $5,000 or $10,000 gold will not mean the same as it means today. If we have massive currency debasement, those numbers will not be as significant as they are today. They may be a fraction. The value at those prices might be a fraction of what they are actually at this point. So, I mean, at that, that's really tough to say. We're going to be in a very different, I think, investment landscape. I have a hard time believing that hard assets will still not necessarily be a place to look at. I guess my sort of go-to would have to be something along the lines of real estate, where I think that once we're in that kind of environment, I believe that interest rates will potentially have been pushed up so high by the market against, the will of central banks, that that'll have hurt real estate enough significantly that it'll be a bargain once again. And I think that's, again, especially that a lot of real estate buying in the last several years, certainly not all of it, but a lot of it has been on considerable amount of margin, which is normal, as we can imagine for real estate. These are large purchases, but some of it is speculation. And so because a lot of it's done on margin with large loans, as much as sort of 10 to 1 or more or 20 to 1, I can't help but think that a lot of that will be sold off somewhat on under fire sale kinds of circumstances. And that would be probably sort of the one place where I could see that there'll be some incredible bargains to be had. And it'll be anyone who, has liquidity to be able to pick those things up. I wouldn't necessarily be looking to buy that with a mortgage or with loans, because the interest rates will be very high. But if you can convert from something that will very likely have become quite overvalued, and I'm thinking precious metals and mining companies and all sorts of precious metals related investments, you'll have to look to go from the overvalued to the undervalued. And that's where I see that we're likely to find some bargains.
Peter Krauth, thank you so much for your time today. Before I let you go, we're definitely looking forward to having you back on again soon, possibly in May when your book comes out, The Great Silver Bull. Where can our viewers find you online? And do you have any last thoughts you'd like to leave with our viewers?
Sure. So to find me online, they can go to silverstockinvestor.com, and that tells you all about the newsletters that I write and edit. And you can see some posts for recent presentations and conferences that I've done, that sort of thing. And I guess the last thing to keep in mind is what we talked about at the beginning, which is that I can't help but coming back to it. It's not a surprise, I don't think, to anyone, but inflation really is going to be a huge determining factor in our lives and in our investment lives for the next several years. People really have to look at what they can do to protect themselves against that. And as much as it might feel like, precious metals maybe have run up and have gotten expensive, that's somewhat more true for gold. And that's why, in part, at least, I'm such a big bull on silver. I think silver hasn't quite hasn't had the run up that it normally has. Maybe we can touch on this very quickly, but silver tends to perform better in maybe sort of some later stages of bull markets, as people, push gold up initially and then look for a cheaper alternative. And silver certainly fits that bill, and that's why it can tend to perform exceedingly well late in bull markets. But silver is still very cheap, not likely to get cheaper. And I think that's probably the best takeaway at this point.
All right, Peter, once again, thank you so much for your time, and God bless.
Thank you very much, Elijah. It's been a pleasure.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.